Welcome back. It's time now to take a look at the top business stories. Retail investors increased share of equities trading in April. Amidst MBD Asset Management fixed income funds performance very strong in first year. And inflation in China again tops government target. Let's look at the UAE stock markets first. Both the DFM and the ADX edged higher today. The DFM General Index gained slightly by 0.1% today to close at 1,608 points. One of the best performers was DP World after the port operator CEO announced a dual listing of its shares. They climbed 1.6%. Drake & Skull rose 2.9%. Emirates MBD was up 1.5% and Shua Capital, which reported Q1 results today, rose 2.7%. Mortgage company Tabreed, which traded for the second day today, was up 4.4%. Largest loser was Dubai Islamic Insurance, which fell 9.3%. 163 million shares were traded, valued at 186 million dirhams. And over in the capital, the ADX General Index rose 0.2% to close at 2,675 points, with the service sector gaining the most. National Marine Dredging Company, for instance, rallied 6.8%. The property sector was mixed. Alder Properties lost 0.7%, while RAK Properties gained 2.6%, and Surul Real Estate was up 0.7%. Abu Dhabi Commercial Bank rose 2.1%, and Abu Dhabi Islamic Bank climbed 0.3%. Dana Gas was up 1.5%, but TAQA lost by 1.4%. 69 million shares were traded, valued at 114 million dirhams. And let's now look at the GCC markets, which ended mixed today. And to discuss one pending issue for the Eurozone, Greece has a difficult time fulfilling the conditions of its 110 billion euro European bailout package. To discuss this further, we are now joined by Philippe Dauba-Pantanacce, senior economist at Standard Chartered Bank. Welcome. So, Philippe, do you think Greece will need additional funding over and above the 110 billion euros?
We expect that Greece will certainly announce a restructuring of its debt by 2012. We think that the likely outcome will be a soft restructuring and not a hard restructuring. Soft restructuring meaning that the private debt maturities will be extended. We do think that a hard restructuring is very unlikely because it would definitely mean a 50% haircut to reach sustainable debt level, which would have repercussion effect on all the banks, both in Greece but also in the rest of the Eurozone, and would probably have major contagion effect on the peripheral economy of Europe. So we think that this is the last option that will be chosen.
The dollar rallied against the euro in the past days. How much of that is euro weakness due to the debt crisis, and how much dollar strength?
Despite the recent strength of the US dollar, we think that the greenback is on a multi-year downward spiral. Actually, we do think that the market is going to be choppy ahead, but fundamentally, there are three main reasons to be US dollar bearish. First of all, the fiscal approach of the US government is definitely more lax than typically in Europe. Second of all, we do think that the GDP growth in the US will soften after the end of QE2 effect on the economy. And finally, there is definitely a growing interest rate differential between the US, which will not raise its interest rate between late 2012, and the rest of the world. We do see the US dollar finishing the year at 1.32.
Thank you very much, Philippe. And now to our top stories. Retail investors increased their share of equities trading in the UAE to nearly 9% in April of this year. Growth was driven by Nasdaq Dubai's decision last year to route all of its equity trades through the Dubai financial market to improve investors' access. The value of equities traded through individuals jumped 35% in April from the previous month to $6.4 billion, up from $4.8 million in March. Jeff Singer, CEO of Nasdaq Dubai, stated that the outsourcing to the DFM system is creating a market with an active retail base as well as more liquidity, putting Nasdaq Dubai in a strong position to benefit from a rebound in regional equity activity. Moving on to the performance of fixed income markets in the region. Emirates MBD Asset Management, a subsidiary of Emirates MBD, today announced the results of its 3 fixed income funds. The fixed income funds classified as the Sharia-compliant Global Sukuk Fund, The Islamic Money Market Fund and Emirates MENA Fixed Income Fund all performed well within the first year of their launch. They showed a strong performance beyond market benchmarks.
The timing of the launch was quite good on our side, and the markets have obviously supported the returns that we have achieved for these funds. Apart from that, we've also focused quite actively on assessment, especially in the fixed income fund and the Sukuk fund on the credit analysis, as we know that is a major part of the total returns that you can generate over time. On the money market product, of course, we have taken advantage of the higher rates that were available in the region here as compared to in the dollar-based currencies.
And in our fast financial news, Dubai ports operator DP World, whose shares are already trading on Nasdaq Dubai, is set to also list its shares on the London Stock Exchange by the end of the month or early June. CEO Mohammed Sharif said in a statement that they were on track with the dual listing, but added that it was subject to completion of the admission process by the UK listing authority. Shore Capital reported its first quarter results today, where the company's asset management division recorded the first net inflow since June 2008, increasing its assets under management by 87 million dirhams to 785 million. And Shore's brokerage reclaimed its number 2 position on the Dubai financial market. Bond issuances by companies in the GCC region rose slightly to $20 billion in the first quarter of the year, up from $19.5 billion in the previous quarter. Experts say this resilience is likely to continue due to substantial refinancing efforts in the coming years. Bond markets are estimated to have provided 40% of debt capital raised by GCC companies last year. And after the break, we will run you through what's making the headlines in international business today.